And welcome back to the Financially Simple Experience, friends. Today, I'm joined by yet another awesome guest, Mr. James Pugh. How are you, sir?
I'm doing well, Justin. Appreciate you having me in.
Yeah, man. Yeah, man. So James, friends, he is the managing director, one of the managing directors at Pivot Capital Partners, which is located both in Atlanta and Chicago. Before we dive too deep in today's conversation, I need to give a disclosure. Here's a disclosure. Mr. James is a registered representative with Finalis Securities, an LLC that is a member with FINRA and the SPIC. Okay, so what does that mean? That's a disclosure that we have to talk about, saying that nothing we discuss today is for investment advice. It's not what we're doing. This is for educational purposes only. Just like me, James is registered, means the SEC, the Securities and Exchange Commissions, oversees what we say. So this is for educational purposes only. But man, James, I'm glad to have you on the show today because I think in the 400 episodes that we've been talking through the Financially Simple Experience, I believe that you're the first and only investment banker that I've had on the podcast. So, man, I'm glad to have you here today with us, brother.
I'm excited to be here, man.
So let's deal with, first of all, what is investment banking? Let's just define that term right off the bat.
Yeah. So investment banking and investment bankers in general can take on many different shapes and forms, really just kind of depending on where they play, right? So, that's probably a non-helpful, type answer, right? But in particular, where we at Pivot Capital kind of operate in is more the mergers and acquisitions process side of things, right? So really representing both business owners and management teams in developing their process towards going to market, what that may look like, what sort of options are out there and available to them, and vice versa on the buy side of things as well. So we may be representing a strategic acquirer on identifying potential targets, what's best fit for them, how are they looking at growing the organization, what is missing within their organization, whether that's human capital, whether that's geographical, but really just kind of being that advisor for them along the way.
So now, if I remember correctly, you're also a CEPA, Certified Exit Planning Advisor. Okay.
Right.
So as a Certified Exit Planning Advisor, we were trained, and actually, I think you were in one of the classes that I taught.
I was trained.
Yes. Yeah. I'm sorry, by the way. I'm sorry.
No, that was a great experience, man. I keep on coming back.
So friends, for those of you who may remember, or maybe it's the first time you've heard us talk about CEPA, I'm a faculty member at the Exit Planning Institute, and I teach the Financial Planning for Business Owners module, along with value growth in various classes. But I think in James' class, he was only on the financial planning side. But as certified exit planning advisors, one of the things that we're trained in is how to help a business owner structure their life so they can exit. And James, we had a business broker on the podcast just last episode talking about, what market that they work with. And it's typically what we call the micro market. Typically revenues that they said between roughly about $1 million in total revenue up to about $3 million in total revenue. They're not even looking at SDE or seller discretionary earnings. I'm sorry, friends, seller discretionary earnings, or they're not looking at EBITDA very much in order to calculate. Now, as an investment banker, you're working not exactly in the same market space. So who is the market that you would see most investment bankers work within?
Yeah. So the majority of investment bankers out there are working towards, I'd say, minimum threshold of that 2 to 3 million EBITDA, which EBITDA is a term that you mentioned earlier that's very prevalent within the investment banking industry, all the way up to lower middle market, that 50, 75 million in EBITDA, to middle market, on up to $500 million. Is kind of where we tend to operate. Now, Pivot Capital, we are typically between that 2 to 20 million in EBITDA range, but where we're a little bit different compared to most investment banking groups out there is most groups are specifically transactional focused. We are heavily involved in strategic advisory. So we really like to engage our clients that 3 to 5 year timeline. All three of our managing directors, myself, Alan Amoon, and Rakesh Parikhi, up in our Chicago office, are all three CEPAs. We're all three CEMAs through the AM and AA. So, heavily, qualified and experienced in the exit planning side of things, right? So whether we're running engagements or partnering with other CEPAs or other outside advisors, we like to be involved earlier on in the process through value acceleration and on through process and positioning.
So whenever, from what I just heard, let me see if I can say this back, that as an investment banker, you're typically working with companies that have greater revenues, greater EBITDA than that of a business broker. So we're not talking, oftentimes, we're not
Correct.
dealing with the startups or the mom and pop business. These are the ones that often have infrastructure, a little bit more revenue movement through the company. And then I think I heard you say that what's different between y'all particular company and other maybe investment bankers is you're dealing with a little bit of value acceleration, helping them prepare to go to market. So that would
Absolutely.
absolutely lead me to the question of, I'm assuming based on that statement that there are some investment bankers that don't do that. They basically, that somebody's prepared them to go to market and then they step in, they act as the facilitator, do the transaction. Am I wrong?
Absolutely, absolutely. So hopefully, whenever we, if you're an investment banking group and you're more transactionally focused, hopefully the company that's coming to you has been working with somebody like an outside advisor or an exit planner through value and growth acceleration. That's not always the case. What you'll tend to see at some of the larger companies is more established management teams that obviously are able to kind of carry on with the transition of the business. Tend to have more risk mitigation processes from an operational standpoint within the organization, which obviously is a little bit more attractive to a potential outside acquirer or investor, right? So
in today's marketplace, we're dealing with crazy valuations, some that I've never seen in my 25 plus year career. It's ridiculously the valuations. Are you seeing a lot more activity than typical in the investment M&A space? Or is it normal, just par for the course?
no, absolutely, especially kind of bumping up towards 2022 and the uncertainty behind what the scope of M&A and capital gains, honestly, going into 2022, what it's going to look like. I think some companies started process, trying to get a deal and a transaction done prior to the end of the year. But where we're really going to see M&A and strategic advisory kind of evolving going past 2022 is really towards the risk mitigation side of things and the value enhancement, for organizations moving forward. So I think those advisors that are really well positioned going into 2022 are going to kind of mitigate some of that M&A activity that might kind of dilute going into the upcoming years.
Whenever you say risk mitigation, I'm assuming you're talking about reducing company specific risk. Am I off base on that one?
No, that's absolutely right.
Okay. And then value enhancement, they kind of go hand in hand. As we reduce company specific risk, we actually increase the value. So
That's
what
exactly right.
would a investment banker look at in terms of in the business itself to start decreasing the risk or increasing the value? Do you play in the same place in the bigger businesses that maybe someone like our firm might work in the smaller business space, or is it different for bigger businesses?
Yeah, no, I mean, I think, whether you're early stage, growing entity with, that sub $5 million, $10 million revenue company, or even past that, I think some of these same variables kind of hold true, right? How are you developing your management team? How are you, is the company too reliant on one specific, employee, on the ownership, on a vendor, what have you? It's really just kind of peeling those layers back within the organization, taking a step back and seeing where you're vulnerable, from a risk perspective, right?
What areas of business? So the way I think about business, James, is I look at planning, strategic planning, if you will,
Mhm.
overall planning, leadership within the company, that might be the team, sales and marketing, people, operations, finance, and legal. I look at 8 areas of business, and we teach that in my newest book, that Your Baby's Ugly, which, by the way, friends, you can pick that up on Amazon or on Audible. Check it out at this point. But whenever you're looking at it from an investment banker standpoint, in the business marketplace that you work, what are the weakest areas of business that you look at and you say, look, when I look through there, here's a consistent low hanging fruit that even the middle market doesn't get right?
Yeah, yeah, absolutely. I mean, to be honest, it's probably more around management teams, the development of the human capital internally, all the way down to employee contracts, looking to be able to make sure contracts are able to be transitioned along, right? So it's just kind of one of those things of not having an active finger on the pulse of your organization, of kind of knowing that eventually this entity is going to need to transition, and not building it in that manner along the way.
So one of the things we teach, and that's in the legal component, is making sure that the employment agreements, you're not going to have any flight risk, things of that nature. You have some stickability with your key players.
Absolutely.
Whenever you're looking at the middle market right now, or even the higher micro markets, I define micro as going up to 10 million in revenue. And I look at the middle market going from 10 to 100 million in revenue. Whenever you're looking at your marketplace and what you play in, are businesses better positioned now after COVID, or did COVID just really rock the middle market world and you're having to take a step back, almost like a slingshot approach to help them prepare for the future?
Well, that's a great question. What I tell everybody is that COVID has actually identified different risks within organizations that companies weren't aware of along the way, right? So, I mean, you're actually starting to see which companies have the ability to be able to pivot. Excuse the pun on the name of the company, but to be able to pivot and to be able to transition through these tough times over the past year and a half. And those that actually had a good footing, had some cash and dry powder on the balance sheets, were able to actually grow during this transition period, especially with kind of workplace placement of working from home, and you're not necessarily having to go into the office space. A lot of companies out there have kind of adopted the remote model, which has allowed for less overhead, right? So kind of trimming the fat along the way.
Yeah, I think COVID exposed us for who we are. It showed us the holes in the dam, so to speak, where we're leaking at, so we can go back and shore those up.
That's
So
exactly right.
in the small markets, oftentimes you'll see business owners who have a significant portion of their net worth within the business. I have to believe in the middle market, it's about the same. Is that true?
It is. It is. I mean, you see a little bit more diversification out there within their asset management. But yeah, I mean, I would say that it holds true all the way up until I mean, higher middle markets up into obviously publicly traded. I mean, that's where you know most business owners, they believe in themselves, they believe in the value that they can create within their organization, and it's worked well for them, right? They're getting higher returns, and they just roll it back into their companies.
So let's pretend you and I are sitting around a campfire. Maybe we're cooking some s'mores, having some nice Southern sweet tea here. And I asked you the question. I said, "Hey, James, look, man, you're wise. You've been doing this for years. You know exactly. I mean, you've transitioned businesses through this investment banking world, finding perfect buyers to put them together and sellers." And I said, "Hey, James, what are two or three things that I need to focus on that just is going to make a difference in my valuation, maybe the multiple involved? Are there any tricks, any secrets out there coming from your mind that you could share with me?"
Yeah, I mean, really, I think if you're going to focus at one particular area, it would be risk mitigation, right? To your point earlier, risk mitigation all of a sudden, ultimately drives valuation, right? So if your focus is on value enhancement, value growth, you have to look at deleveraging your company from the get go. Another thing is surrounding yourself with advisors, with great management team around you. I'm an Auburn grad, so I'm an Auburn man, and I hate using Nick Saban as an example, but he's really good at what he does as far as surrounding himself with a great quote unquote management team. I don't know if I'd drink a beer with him, but I definitely hire him to be my CEO of my company, right? So it's really, again, being strategic as you continue to grow your company. I tell all business owners out there that you allocate probably a budgetary line to marketing and advertising. Honestly, value acceleration and strategic advisory services is something that from the get-go you really ought to be forward thinking about as you continue to grow your company.
What's one question that you wished business owners would ask you that would drive their value up, or maybe that would prepare them for exit, or maybe that may prevent them from having a headache?
Yeah, to be honest, it would probably be around, having conversations sooner rather than later. Who's the right people to kind of put on the bus with you, put in the right seats along the way, especially around kind of capital sourcing and capital allocation. We spend a lot of time really focused around the cap stack and where earlier stage companies can really source capital. Just understanding where your options are as you continue to grow your firm, having conversations with, whether it's us at Pivot Capital from an investment banking standpoint, always happy to be a resource, but other advisors out there that are very well versed in when you need to bring on certain sources of capital, where to be able to source those capital relationships from, and, just at what point.
So that's a statement that I don't think I've used on the podcast, and that is capital stack. I know what you're referring to, but can you define that term?
Yeah, capital stack is just kind of where you, along the way within your operational strategy, where you're pulling growth capital along the way. As you continue to de-lever and de-risk your organization, you're ultimately going to source cheaper and cheaper dollars to be able to grow your company. It's that whole saying and adage, why use your money when you can use the bank's money? Essentially what you're trying to do is you're trying to eventually evolve your operations to where you're getting cheaper and cheaper capital along the way. And what your buildup of your cost of capital is essentially your cap stack.
So I don't think many of us understand how expensive it is to operate our businesses from a self-generation of capital. In other words, friends, it's not uncommon for business owners to cut our lifestyle down and deploy money back into the company in order for us to grow it. That's actually one of the most expensive ways to grow a company there is. But you have to reach a scale. There's a certain point in every industry, every SIC code, every NAIC code is going to have a slightly different threshold. But James, let's just say, for example, there's a company out there that's, best in class in terms of revenue, and they're producing X number of dollars, which is in the top 10% within their industry quartile. And it could be, for somebody in one industry, it could be $1 million, whereas another industry could be $50 million. And all of a sudden they want to say, look, I'm tired of self-floating this. I need to bring an investor on board. I'm not ready to sell in terms of exiting, but now I need to build my capital stack. Mm-hmm. How would they go about doing that, working with an investment banker?
Yeah, so there's many different options to be able to look at. Especially going into 2022 around the conversation of capital gains. ESOPs have actually become a topic of conversation of late to be able to kind of mitigate that. That capital gains tax, and now caveat. ESOPs are not for everybody. It's particular types of organizations out there. But yeah, there's many different options. Maybe a minority equity buyout. Maybe a refinancing or recapitalization within your organization. Really, what we like to do is approach every transaction, every business differently, and really kind of from the front end, peel the layers of the onion back and really understand what the owner is trying to accomplish. And that's really how we're able to understand, okay, who do we need to bring to the table? What's the best option for them to be able to reach their particular goals?
So in the investment banking world, you have lots of arrows, so to speak, in the quiver. You can go to restack the capital. You can look at a partial liquidation, a full liquidation, a silent partner. There's tons of different things that the investment banking world does that oftentimes the business brokerage world can't even touch. Am I accurate in that statement?
That's exactly right. Yeah. So we have great relationships with business brokers out there, and the tremendous resource, for both, more micro market companies and for other outside advisors. But a lot of times they aren't securities licensed to be able to actually go out there and engage in what's classified more in a securities transaction, which would be more your recapitalization, more your sourcing of debt or equity to be able to structure out a transaction.
Yeah, and friends, that's exactly why I read that disclosure saying that James is part of the Dallas Securities LLC, member FINRA / CEPA, and that's why we had to disclose that, because Pivot Capital is one of these investment bankers that can actually help build a capital stack in this particular scenario. So let's bring this plane down to the ground a little bit. You can see behind me, I love to read. You and I talked about this. I love reading. I think that an educated person is something that no matter what happens in life, we can't take our knowledge from us. And then when we apply knowledge, it becomes wisdom. So wisdom is knowledge applied, right? So That being said, I know you love to read. So what's a book that you've read recently that you would say, hey, Justin, you got to check this out?
Yeah, to be honest, I mentioned earlier part of the AM and AA, and this is actually a I wouldn't say textbook, but some material that's part of the CEPA program, and it's called the Handbook of Financing Growth. I'm not sure if you're familiar with it, but from Kenneth Marks. But that really helped me out from the onset of my advisory career of understanding what's available whenever it comes to developing your capital stack. What sort of financing is out there. I think it's a great, easy read for both advisors as well as for company owners to really have a clear understanding of, again, what's available out there as they continue to grow.
Yeah, I've read that book. It's not for the faint of heart.
No, it's not. No, I say that it's an easy read. Now, of course, I nerd out over capital allocation and finance books, so may not be for everybody. But it was a very, I guess, insightful book, and I think from an operational standpoint, it's great just to kind of have a finger on the pulse of, like I said, what's available out there.
Well, that leads me to a question that I want to circle back around to. You said, hey, you need to start building your team. I asked you the question, hey, what's one piece of advice you would give me if we were sitting around the campfire? And you said, man, build your team. Who would you place on your team? And let's say that you're in the business right now, you're kind of rocking and rolling, you survived COVID, you know that you're going to need capital in the next 2 or 3 years. Who would you put on your bench if you were the business owner in that position?
You talking about as far as a team member goes?
Yeah, team member. Maybe it's the board of advisors. Who would you have that says, hey, here's what I need on my bench in order to help me get to the next level?
Yeah, absolutely. I mean, I would just have a core advisory group, whether you actually hold them as a board of advisors or even if it's just an arm's length, a wealth manager, a great CPA. Now, understanding if you're looking at a transition, a transactional CPA is obviously different than your normal tax mitigation CPA, right? So, I would just have a good, solid team behind me, great relationships within your local community bank out there. And then understanding, to be honest, really who the high net worth individuals are within your community and kind of embedding yourself within those local chapters, local, associations, because again, sourcing capital, especially early stage, can show up in many different forms. It may come in from a client, a competitor, a supplier, as long as you have the right opportunity and somebody has the right appetite for risk, there's ways to be able to source that capital.
So here's my somber question for you. This is our last day on earth. Okay. And you have all this wisdom, right? You have the credentials. You've read an amazing book called The Handbook for Finance Growth Strategies and Capital Structure by Mr. Kenneth Marks. I mean, you've read these textbooks. You deal with this day in, day out. And now you have one nugget to leave the audience. You have business owners on here of every range to the higher middle market, all the way down to startups. What is that one nugget that you leave business owners saying, you got to know this will impact your life?
To be honest, I don't think it's more, of this eye-opening little nugget more than something that all business owners know but neglect is to plan early and to plan often, right? It's always backward looking of, man, I really should have prepared myself or prepared my company sooner rather than later. And it's not that it has to cost an exorbitant amount of money. It doesn't have to be so complex and strategic, but having conversations sooner rather than later to arm yourself with knowledge as you continue to grow your organization, right? I mentioned earlier, we're always happy to be a resource. We tell everybody at the end of the day, we're in the relationship business. So we always encourage conversation sooner rather than later. I encourage anybody that's interested to reach out to us to be able to have a conversation. Whether you are a micro market company or you are looking at transitioning and you're in the higher middle market, love to be able to provide introductions and learn more about you.
That's sweet, man. That's pretty. So thanks for coming on the show today. My guest today is Mr. James Pugh. So James, in order for them to connect with you, to be a resource, where would you send them? Would it be Pivot Capital? Where would you send them?
Yeah, absolutely. Make sure to check us out on our website. It's pivotcapitalllc.com. If you want to reach the office, number is 888-585-9981. And obviously connect with me on LinkedIn under James Pugh.
Sweet. Well, friends, we may have to have James back to talk about the capital stack. That's one topic I've kind of stayed away from because it gets really heady really fast. So James, I may pull your knowledge in to say, let's talk about capital stack. Let's talk about what it means to do a partial sell, things of that nature. I know that's an area that's near and dear to your heart based on some of our previous conversations. So brother, thanks for joining us on the Financially Simple Experience.
Yeah, well, I appreciate you having me, man.
So friends, you'll be able to check out all the links that James gave in the show notes below. Please reach out to him. If you find yourself saying, hey, could I perhaps sell, or could I raise some capital and build that capital stack? You got to check out, you want to Google that and do a little bit more research around that. Use James as a CEPA, as a fellow CEPA within our community. I know he knows what he's talking about. That course is heady. It is not an easy one to pass, and it trains a lot of information in a very short time frame. So I know he knows what he's doing. So James, thanks for joining us today. And friends, look, man, I realize life is hard. I get it. Trying to figure out where you're going to get money from in order to accelerate the growth of your business. That's tough. You got to have experts on your team. So life is hard, but life is good. I mean, think about it, James. The very fact that we can talk about how to grow a company is amazing.
That's absolutely right. I tell you what, I'm amazed whenever somebody's willing to listen to me, man. So, it's a good day.
Yeah, life is good, and life can be frustrating. It can be. It doesn't have to be. Let's continue to make our lives at least financially simple. Y'all go out and make it a great day.